Okay, everybody, welcome back to another episode of Matt Money. Today we're going to be talking about potentially investing more into Cardone Capital. Now, of course, you're probably are immediately saying, I'm probably the stupidest MFer alive for trying to actually do this. And you might be right. I've done a lot of research and actually seen like this is a pretty good investment. I've actually had already invested about $15,000. And for some of you guys, I lost all my money. None of this makes sense. The last video, of course, I did here. Everyone can kind of see that, I've lost all my money. I'm the stupidest guy alive for doing this. And of course, you see all these videos on YouTube talking about how it's the biggest scam of all time, and you of course see Meet Kevin obviously talking about the same thing, that Grant is the biggest scammer of all time, and there's absolutely no way he knows any idea what he's doing with respect to real estate. So you hear the words like Ponzi scheme, scam, bankruptcy, all the time. So of course, when I invested my money last May, I lost all of it. Right? I mean, all this portfolio is obviously Grant Cardone, and just the $15,000 that I have here is absolutely all my money, and so now I'm actually making this video. The only thing I have left is my laptop and my headset that I'm recording this on. So of course, if you guys want, you can send me money, obviously through Google. Google will take a portion of that, but of course this video is just basically me recording this in my cardboard box and making more poor decisions and trying to make money in Cardone Capital. Of course, I haven't received any money back from Cardone Capital. As you can see here, I'm obviously not making any sort of cash flow or anything along those lines. And yes, Grant did cut distributions from April to June timeframe, but that is a temporary suspension, I guess, just so that we can be sure that the properties are okay and that the cash flow does not dry up, and that if there's any major needs for additional funds, that we will have that on hand rather than just automatically giving it out to investors. I'm more than happy with that. Having the properties underneath my name is more important than that. And of course, if you guys still don't believe me and you think that Cardone Capital is the worst and biggest scam of all time, which according to YouTube it is, you can see we look through the cash flow statements for the properties, the 5 properties that Cardone Equity 5 and Cardone Equity 6 are invested in. And you can see, rather simply, that they actually do return a little bit of money. Just to quickly give you a rundown, between Cardone Equity Fund 5 and 6, they basically invested $150 million. And in 12-month cash flow, they probably would return about $8 million back to shareholders. Now keep in mind that's not going to happen this year, just based off the fact that we are in a very interesting year, something that nobody could have forecasted with respect to the volatility that we're seeing in the markets. But in a normal year, I would anticipate getting at least 5 to 6% returns from the cash flow. And keep in mind that these 5 properties, we own control of them. So that being said, this is a pretty decent chunk of revenue coming in. It's about $69 million worth of revenue coming in, if everything kind of remains equal. So regardless of whether or not, however you feel about the current state of the markets, whether it's real estate, whether it's the stock market, we invested $150 million and we're getting about 62 plus or minus a couple million, 69 plus or minus a couple million, of course, with the recent volatility, in revenues coming in from rents, from other things like, having parking and utility payback and stuff like that. And we only have to pay back, let's look here, 41 million of that in, that's the net operating income, so the money that we get to play around with. We only owe 23 million or so in interest. So that being said, everything looks relatively good in my opinion. You have 69 divided by 23, so we have about almost 3 times as much money we need to just service the debt and keep the properties in our name, and control the properties, do capital improvements, things along those lines, things that we have done about $1.6 million worth to help increase the rent roll that obviously comes in here. So of course, why would you do that? I mean, if the properties are cash flowing anywhere between 15 to 38% of the revenues that you're seeing, why would you ever put any sort of money into that? I mean, it just doesn't make any sense. why would anybody do real estate if they can get 15 to 20 to 30%, maybe even close to 40% of their money in cash flow? I mean, it just doesn't make any sense. So you're right. I'm gonna do it. I'm just gonna put all my money back into it. It makes so little sense that I would do that. That I decided to actually potentially look at an additional investment. So there's about four other properties that are either closed at this point or will be closed. Properties in Panama City Beach, and Columbia Town Center, which I don't know if that's in Maryland or Virginia. Then you also have some more Pebble City Beach here, which is a pretty decent one. This is actually the worst one out of the properties that I looked at here. And then of course you have, or was this one the worst one? I think this one was the worst one. I'm trying to remember. One of the two, I was like, I could do without investing that one. No, this one's actually nice. Okay, never mind. So I think it was the one here in Pebble City Beach, that was okay. I wasn't the biggest fan of it. It's not necessarily in the most booming town. Granted, it kind of does have some stuff that they're going to try to build and build up over the coming years, but it does seem like it's got a little bit more, I guess. What's the right word I'm looking for? I guess portion of their revenues or portion of their money from the entire area coming from hospitality. So like people being tourism and being there for just, I guess, getting away. So in that respect, this one is kind of at risk with respect to the things that we're kind of seeing at the current market. So the other ones like Columbia Town Center, you live nearby DC and have a pretty nice Northern Virginia area there, or is it Maryland? I don't really know. But regardless, these are pretty high quality properties here, so definitely can't complain with owning a portion of these. So um, just in looking at some of these properties, of course, they don't give you a big cash flow statement here with respect to what's actually the 12-month rent roll or anything like that. But they do give you an idea as to what they believe they'll be able to make on the property when they kind of do their financial analysis here. And you can kind of look here, and it looks pretty good. It hasn't varied too drastically with compared to what I looked at when I looked at and invested in Cardone Fund 5. Versus what I actually received. And I'm pretty sure with Cardone Fund 5, I was expecting a little bit closer to 6% in terms of cash flow return to me. However, it ended up being about 4.5%. And I think that somebody told me that that's generally relatively expected when a fund kind of gets put together. Or a syndication kind of gets put together. They're kind of making sure they have enough cash on hand that if anything drastic happens, like some sort of hurricane or anything like that, so that way they don't have to worry about it over the next 15 to 20 years. Now, of course, within the first year of investing in Cardone Equity 5, we obviously had this volatility and economic impact hitting the market. So that a little bit puts a wrench into the mix, which is why cash flow distributions might have been suspended for the next 3 months. But I fully anticipate that as things kind of get back up and opening, actually places in Florida are actually starting to open back up. I believe beaches are already open again. Things will continue to get better. People will go back to work, and we'll at least have that sort of job kind of coming in. But there is opportunity, right? I mean, you do look at some of these properties, like this one in particular, the PCB property. Doesn't look that great, it looks kind of outdated, but that just gives opportunity, if possible, to invest in here, do some capital improvements, and then increase rent. You could easily put, $5,000-$10,000 into some of these apartments and raise rents by easily $100-$200 a month, and that would automatically increase the property value substantially, just because you have a cap rate of, let's say, 5 or 6% on some of these A class, B plus class properties. You could easily, if you were able to raise the rents by $150-$200 per month, that means you have $2,000 or so additional revenue coming in. And of course, if you're able to do that, you're going to be able to raise net operating income by, let's say, $1,200 a month, and that would then in turn increase the value of the property by about $15,000 to $20,000 per unit for every unit that's there. So in the case of 300 units, you're looking at, let's just say, $500,000, $600,000. with relative ease, to improve the property just a tiny little bit. So anyway, just some thoughts here. I'm probably going to lose all my money just like you guys hope that I do. I'm glad that you guys are happy that I'm living now in a cardboard box. If you guys want, I don't have an email address anymore, and I don't have a mailing address anymore. So you guys really can only get through to me now with my comment section on my Instagram. So if you guys want to keep giving me nasty comments and telling me that I'm horrible, don't know what I'm doing, that I should get a lawyer, all this stuff, make sure to leave it in the comment section down below like the people did in my last video. And hope this video finds you guys great. People can't really read anything either. They're pointing out videos and time markers in the video, and I listen back and I'm like, I said the right thing, you typed down the wrong thing. I mean, the viewers here on YouTube are the smartest people that I know. They know a way more than what I do, obviously. So that's why I make these videos, so that you guys can coach me and make me better at investing, because you guys obviously know way more. So anyway, I'm gonna continue to be broke, even though Cardone Capital is about 3.5 to 5% of my portfolio. I'm gonna keep living in my cardboard box here, and I'll talk to you guys in the next video. Cheers.